Hello, Auvorians globally. Welcome to the July 7th midweek software strategy session call. My name is Steve Vetterl, Chief Market Analyst, although that sounds quite too formal, right? Just call me your risk manager. So my job essentially is to help you plan for the future, depending on where the Forex markets are moving, and not blow up your account with incorrect and risky settings. So with that being said, let me show you our risk disclosure. Read it real quick. We have a new page to the risk disclosure. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. And most importantly, whether or not you can afford to lose the money. Okay. So if you are sharing any of the results using Alexander Iris Einstein, essentially only allowed in our designated Facebook groups, please do not use the term recommended company settings. Auvoria Prime doesn't have any recommending settings. They're not a financial advisory firm. They're licensed software that softwares can use at their own risk and discretion. Some software does come with default settings upon initial setup, which users have the ability to customize their settings however they want. Auvoria has nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't recommend any brokers. Again, we just sell amazing education and licensed software that you can make changes to. So I have settings, but they're not company recommended settings. For anybody that this is the first call they're joining us, I host this call Tuesdays, 10 a.m. Pacific time on both Tuesdays and Saturdays. Try and go through the Forex markets, try to go through what's going on globally. Let me switch over to a new screen. And let's begin with the S&P 500. For those overseas, this is an important index. It's the 500 largest market weight companies by capitalization. It's called the S&P 500. It is where the vast majority of international investors look that are equity or stock-based first. So I always want to make sure we go through the charts. We're stuck in a really tight range, essentially from about 3230 on the high side, which is where the beginning of this huge sell-off took place, all the way down to 3000. Okay, so we're stuck in a tight range. I think the last few days, the markets have gotten a whiff of many potential extensions on unemployment benefits, potential bailout number 2 for the Secure Act, adding essentially ornaments to the Christmas tree that has become that debt-inducing bill. Let's take a look at the accounts. Actually, you know what? Let's take a look first at the Forex calendar. You know, I really, there's not a lot going on this week. So I mentioned that the developers are running this week, which I post to my trade tracking channel now. And then just looking at the filters, we've gotten essentially past. There's really just not much going on. So take a closer look at the accounts. This is one of the demo accounts we're running. This particular account, let me just download all history here, is running a different 3-ring pair, if you're new to the game here, than essentially we started with. But we put this account together to track some different stuff. This is the main account that we run the settings for. This is the live account of 3K. Go back up to show what's going on. Then I'll jump over and show the FX books on these. Most of the stuff can be found in my Telegram channel. If you guys have not gone and subscribed to my Telegram channel, I would do so. Just go to the Auvoria Prime back office. Once you click on the dashboard on the right-hand side, it'll show a group of 3 products. Choose which product's yours and click on it. And then you can scroll down that page and find my Telegram channel. This account was started back on the beginning of June. So we literally have just passed the first month of trading with this account. We funded it with $3,000. It has the high volatility settings, which for those that are new to the game are nothing more than a flip-flop of the range multiplier and the position size multiplier from the default settings that come outside the box. Okay. So let me just, there we go. I'm going to talk a little bit on, oh, and before I get into that, the Q&A window is open. So if you guys have any questions, feel free to start typing. Questions can really be on any topic. Just make it a complete question that I can understand or suggestions for what you'd like to see on this call. So the main topic of today is going to be on loss and dealing with loss. And I know I've touched on this topic before, I think, but I'm going to probably come out with a couple of different nuggets that we can talk about in terms of loss and how to really, and I think the most important thing here is I really want, whether you're listening to this call live or you're going to recommend to some of your team to listen to the recordings once it get posted in the back office. The important thing with loss is that it really, in my opinion, starts with the starts really with the understanding that all financial markets and trading has a potential for loss, right? The problem is that many people are brought into this profession with a not the correct expectations set, I guess is the best way to put it. Many of the expectations that get set are something along the lines of, hey, come on in, you can't lose any money, you'll make money. And that applies to almost everything. So a lot of the mentors around the country, which I got to tell you, outside of Auvoria Prime, there's a few I respect a lot, but the vast majority of people in educational land are just a bunch of snake oil salesmen that couldn't trade their own way out of a paper bag. And that's one of the big reasons I started FXE as trader a long time ago. Because I just got sick of the rut levels of education. Many of these people you couldn't do a deep dive on and couldn't do a Google search on them like you could me, couldn't do, and just really couldn't find out if they were a real person, right? Or just some knucklehead living in their parents' basement. So this industry, although it agitates me to a point that I have decided to put a chunk of my life into mentorship, both in the Forex and future sides of the space. And obviously I do that for a living as a financial advisor with a big chunk of clients in equity and bond land. But the key thing to understanding loss is that it comes with investing. If you cannot deal with loss, that's okay. Maybe you need to save up some more money or, take some more, training, understanding to really get around it. But I can tell you that the vast majority of the most successful people historically on this planet have incurred tremendous amounts of loss on their way to success. I mean, you've probably heard the story of Colonel Sanders at Kentucky Fried Chicken. I think he sold his recipe to, or pitched his recipe to like 1,000 people before somebody took him up on it, or something like, the stories of, and there are just tons of them out there. But I think that, I heard the example the other day of dealing with loss in Forex trading as being similar to a baby learning to walk. And I thought that was a pretty good analogy. I've never sort of explored that, but it's like a child that's beginning to walk. You're going to encourage them to walk every time they fall down, right? And you're not just going to tell them to stay on the ground. So with a lot of the big mentors out there in marketing land for the MLM portion side of this business, I would encourage you to have a conversation with your team on the next call surrounding loss. And if you need to reference the July 7th presentation that I made for further details on how to deal with that. But I really think it starts with the onboarding process, and having to understand how important this topic is. So I decided to talk a little more about it. But essentially, I prefer to grow a mindset of abundance, essentially think positively, right? A lot of you may know that I'm actually a big fan of Tony Robbins, a big fan of, the book 10X. Grant Cardone's written, who's maybe a little more come from the trenches. But everything that those guys talk about is all about mental attitude. You go and break it down in zillions of different forms, but it's training essentially the subconscious portion of your brain through whatever neurolinguistic programming, whatever you want to call that type of training. to think positively. And that really is just very easily attained by just thinking positively. It really is that simple, but you got to do it a lot. You have to put yourself in the mindset of, if I want to be this, right, whatever the goal may be, whether it's religious, whether the goal is family, financial, social goals, whatever the particular goal is, you have to put yourself in the mindset of that person. You know, what would I do is if I was this individual, right? If you were a exceptionally well recognized pastor, you know, how would you act? You know, how would your sermons look when you spoke to your congregation? You know, things like that are important in sort of building that mindset. I find that when I want to be successful at something, I really just put myself in a position to think positively about that. You know, I've seen just a zillion examples out there. One of them I like is Michael Jordan, who's a very famous, now retired basketball player in this country. Just a global icon as far as Air Jordan. He's just a really good guy. He used to have a lot of summer camps where instead of throwing free throws, he put the kids on the bench and just have them look at the net for like 20 minutes and picture yourself making free throws. And sure enough, regardless of the size of the kid, they got up to the line. Their percentages of making those shots, even as inexperienced at basketball, were really very good. So I think just putting yourself sort of in the mindset. So it's probably tough when you're teaching your group, and we sort of go through this, and even a little bit of browbeating in our team is that, you know, when newbies are starting out with the software, you know, you got to recommend obviously doing a demo for a few weeks, even a few months if necessary. I always have a tendency to argue on the longer before they go live. But the minute they go live, there is a chance, you know, that the market can turn into complete mayhem like it has a whole bunch of times this year, especially beginning of June during the pandemic and the very beginning and throughout the month of March. You know, and they see the accountants shrink instead of grow. So we need to help people develop the mindset that loss is part of trading in Forex. And the statistics are out there. I mean, 95% of traders in the discretionary trading land or manual trading, they lose money. Why? Why do they lose money? Well, one of the big reasons is that they're lazy. And they think that, you know, they could just go in and execute a couple of trades after watching a couple hours of video and they're going to be a superstar manual trader. You know, it's just not true. The other reason that a lot of them fail is they just cannot deal with loss. They've never dealt with it before. They've made a bunch of money. And I've seen this from the most experienced C-level executives, physicians, doctors. A lot of these guys coming to me, they may be fantastic at their own respective professions or superstars. But as soon as they step into the markets, they're completely humbled. And unless you're willing to put your ego aside, as I absolutely had to do, the market's going to crush you, especially in discretionary trading land. So one of the big reasons I joined Auvoria is that the products that are going to be coming out and some of the new ones we're going to be releasing, you have the ability to cut that learning curve down by like 3/4, 7/8, because the software does most of the work for you. You know, in some cases, you got to click I accept the trade. Some cases, the software will do the trade for you. But regardless of what the product is that we come out with, none of this stuff is plug and play. I mean, you're absolutely going to have to be looking at what are the settings, you know, have the settings changed? Hey, what's Steve saying? What's Jesse saying? What are all the other coaches out there? You know, what's the training that Adeze Duncan and the team with Basic Forex have put together, which is fabulous. You know, that's stuff you got to focus on. But continually, the biggest problem I'm beginning to see, and it's getting better, which is good, is that just not enough people are getting exposure to this. And I know there's some that have been on these calls for the last few months saying, Steve, this is broken record stuff. And yeah, you're right. It is. But if you're not communicating to your team what I'm talking about, or at least push them to these calls, then we're all doing our team a huge disservice. So, and I'm just going to leave it at that. Okay. That's my podium for the day. But learning to deal with loss really involves having a deep conversation with the team, as we've had. Doesn't mean we're going to fix all the problems and everybody's not going to be unhappy with the next loss. But what it does tell you is that at least we're putting forth the effort, which I can tell you A lot of these gurus out there, SOP gurus, whatever, stock, equity, futures, forex trading land, they're selling a $5,000 course to learn how to trade. They don't care whether you lose money or not. All they care is whether or not you buy their course. Whereas I took a completely different approach when I started FXE as trader. I actually spent a majority of time talking most people on the phone out of buying the course. Why? Because they just didn't have it in them. Doing it as a disservice. It's a very small piece of what I do as a business. But if I did it, I want to do it right. And I wanted to have a group of successful students. That's really all I care about. I don't want anybody out there complaining, these guys at FX did this and that. So I focused mostly on having a conversation before almost every student took the course, and the vast majority of them I talked out of doing it because they didn't have it. They didn't have the mental aptitude. They didn't have the mathematical acumen. They did not have the fortitude to push through, right? Because manual or discretionary trading is tough. It's a really difficult gig. And unless you're prepared and you can weather through all kinds of storms, that some have very successfully been able to do. And I commend you for that. But for most of your teams, it's going to be a conversation that has to be had. But it's also a huge benefit to what we're doing here because the software does a lot of that work for you. So on that note, let me jump over real quick to the MyFX. This is the big account, one denominated in euros. Do keep in mind this is 0.01 per 3K is what this trades. So it's a very conservative account. It is also trading the 3-ring pair that you see here. And this is all the numbers for the week. So the account's up about 0.41%. So far this month, we're up about 1.23. The account's in slight drawdown right now, which we're not too concerned about because it's been slowly crawling itself out of this in an expedient fashion. So go ahead and ask some questions. Let me jump over to the question room. So Rick asks, I'm new and a little surprised that the 60% drawdown is the standardish setting. Okay, so let's go talk about that. So here's the number that Rick speaks of. Scroll up here. Do know that there are many out there that trade, and this is not a suggestion to switch to this number, but do know that there are many out there that have this set at 100%, meaning that they're willing to lose all of their account. Why have they set it at that point? Well, because of the fact that in many cases we see small accounts trading 3 pairs, which we typically do not recommend until you get to about the $2 to $3 grand level. And even then, it's a tough sell. You should be closer to 2 pairs, take one out. You're not casting the software wide enough net to do its job, right? So as I've posted in my Telegram channel, my drawdown strategy, since the Euro JPY is twice the range and volatility of the other 2 pairs. So the Einstein Alexander algos that you guys are subscribed to is, the base algo that drives both of those is a cost averaging strategy, which means it actually leverages drawdown as part of its trading strategy. So it will take a deeper and deeper trade because it knows that rubber band is getting really stretched as far as movement in price, right? We certainly saw this at the beginning of June. And many times throughout the last 6 months between pandemic craziness, Brexit talks, central banks drawing countries, especially the U.S., into more debt. That's all a devaluation mechanism for the underlying currency of that country, right? So a little macroeconomics discussion here, but tendency to come to draws more debt. It does take the currency and devalues it to a certain degree because of the debt level. Now, the U.S. dollar, unfortunately, is the lesser of all evils in Forex land right now because of the fact that our Federal Reserve can print an infinitesimal amount of capital to put into the monetary supply globally. But we set it at 60. That's the default setting. You can move it. The problem is if you were to take this to like 20, right? You're going to get blown out of trades left and right. Okay, and the software's not going to get a chance to cast that big wide net, right? So the most important thing is if somebody says, "Hey, I'm surprised at 60," well, maybe that tells me they can't afford to lose some of the capital inside the account. In which case, you probably shouldn't be having in a live account. How do you consider swap specific when we consider drawdown pair to carry over next week as an impact closing in break even or profit? How do you consider swap specific? I'm not sure I understand the question, Sebastian. So if you could reword that, that would be great. Also curious, if you don't see an alert for an hour or two, does it make sense to accept it? Usually what I do when I had Alexander running is when a lot of times if I'd wake up, there'd be alerts from quite a while ago. I would just delete them all. And then if the alert comes back and it's still an active trade, then I would accept it. What's the pros and cons of setting max level to 8 instead of 4? I only had mine at 4. Since I haven't seen any of the data, Elizabeth, at 4, I don't know that I'm going to be that qualified to answer this question. The key thing with the max levels is if you have it set at 4, let me just open up the settings window here. What Elizabeth speaks of is this max number of levels here at 8. The problem with this is if you cut this in half, essentially you're still saying what? I'm smarter than the software. I don't want to take as much risk. Now, there's certainly a good argument there. And, it sort of falls maybe in a slight comparison to if you wanted to just stop accepting trades, which is more of what we would recommend versus getting in there and tinkering around with the core settings, right? I akin this max number of levels to like the cylinders in a car. If you're in there turning off 2 cylinders, how's the engine going to run, right? It may still run, may run weird, right? Surprisingly enough, Cadillac's one of the few that's come out with an engine where the cylinders can shut off and actually work effectively. But he used a terrible strategy from most automakers the last 30 years. So I would probably get that back to 8 if it's set at 4. And then maybe just do a quick check on if you're trading demo versus live, right? Again, if you're trading live money, you cannot afford to lose. Go back to demo. Just wanted to ask you as to when do I change the minimum lot size from 0 to higher? So ultra conservative, Tejas, if I'm pronouncing your name right, is 0.01 per 3K of live money. Okay. Not as important in demo, right? Unless you want to collect lots of data. Much more important, live money. So switch back to the FX. This link is in my Telegram channel to the FX book. I encourage everybody to set up a My FX book for your account so you can analyze and or show me or your team. This is 0.01 per 3K. Very conservative. Until the currency markets show us more stability. Remember, there's 25 pairs to trade globally, right? Covering almost every ring that exists from country to country. Until this market shows us some stability, we begin to get into some decent trending, which we really haven't seen because these markets are all over the place. I'm going to be more on the, the high volatility settings that we've implemented, which is nothing more than flipping the position size multiplier to the range multiplier, keeping the starting lot size at 0.01 per 3,000 for the large accounts. For those of you that are trading smaller accounts, you can't go any lower, obviously, than 0.01. So you're sort of stuck at 0.01 until you get to, I'd say probably about, all of those settings. If you guys want to go into the detail, I have an exhaustive write-up in it in the back office. It gets posted every Saturday. A lot of that is the same stuff, slightly we'll make some changes, which we really haven't done in the last month. So many of those notes you'll see in the back office from the Saturday call that it shows exactly the starting lot size based on the account size. It's in detail. So next question that was asked is, will volume in the markets be lower in the coming weeks because of traders taking vacation? And if so, will we see more volatility like we tend to see on Fridays if there's less volume? So just know this, if the volume is lower in any market, I don't care if you're trading playing cards with your buddies on the field, or if you're trading, Apple stock on the NASDAQ, the lower the volume, the more the algos have a tendency to want to go on and terrorize retail traders. Okay, so just know this as a core fundamental of how markets execute trades. So if the volumes are lower, which is very typical in all markets during summertime, there is a chance for more volatility. Okay, Steve, so I hear all that. So what's that mean? That means that we're probably going to be running high volatility settings all summer, right? So there are many on these calls that know a lot about what they're doing. They do a lot of discretionary trading. They, will go in and accept and not accept certain trades. I mean, if you're one of those individuals, most of what I talk about, you can adjust, right? But this call and most of these calls are designed for the 95% of our, which is now growing to be a massive subscriber base at this company. These calls are designed to control risk, to have you in the thought process to understand loss, to have you in the mindset for long-term thinking, right? 1 month, I can't tell you how many emails, and I started squawking about this on all these calls. People probably get sick of hearing me talk about it. So I don't get any calls about short-term myopathy in the markets, right? I just don't hear it, which is good. So maybe I'm somewhat doing my job on there. Maybe everybody's just afraid to send me an email now. I don't know. But the point is you got to have a long-term focus, Just think long-term, right? It's kind of like a 401k. You put, or whatever you guys call retirement accounts overseas, where the employer contributes some, you contribute some. It's a bunch of mutual funds and different bases of, stock or bond allocations, right? Different aggressiveness of growth versus value. You're still contributing to the 401k. So a lot of people that are in drawdown, maybe it was just bad timing as June has been somewhat of a terrorizing month for some of our newer traders. We'll get past it, guys. Put some more money in the account. Really helps the drawdown, right? And it helps you really sort of pull out and have a lot less drawdown, right? Just like in a 401k, especially for all these people on this call that had a whole bunch of money in their 401ks for 2008 and 7 and 9, and just saw the markets just boom, the accounts down. I routinely saw accounts drop from 800,000-900,000 for bigger folks that weren't clients of mine, because I had most of my clients in cash during that period of time. But they took 50% haircuts in their 401k, and but they were still contributing to that, right? So even though they saw some big losses, they came back, right? And I know some of these numbers for some of you in different parts of the world are probably just sound astronomical, but just dial it back down to your own expectations for your country, right? $10,000 in some country just may be an absolute ton of money, and if it buys a lot more, hey, I'm jealous of you guys. I wish I lived there, because this is costly to live in SoCal. Let me tell you. Plus, the state sucks your life out of you when you have high income in terms of state tax rates. So maybe I'll be moving to Tennessee or Arizona eventually, right? But as I get off on a diatribe, so let me just go into but the bottom line on volatility is it increases when volume drops down. Does it make sense to have a large account to say 20K plus on more conservative things than run through 3K accounts? Yeah, absolutely, Rick. Absolutely. The key thing is one has to ask themselves, can they afford to lose this money? Have they run a demo? Do they understand the settings? Are you completely sick of watching all of my Saturday and Tuesday calls, right? I used to joke with my students. I'm like, look, you guys should absolutely be completely sick of hearing my voice. That's when you know that you've listened to the course effectively, right? Or you've gone through these calls. Yeah, absolutely. All right. With 4 levels of the software, now this is just a note from one of our experts I'm going to read to you guys. With 4 levels, the software may keep you in drawdown a lot longer. Okay. So you don't allow the software to do what it was designed to do. Again, I'm always saying I'm stepping in front of the software and saying, hey, I'm smarter than the software. So essentially, you don't allow the software to do what it was designed to do, getting you to close an entire sequence at a net profit on a normal retracement. With 4 levels only, the tracement would have to be a lot larger. Very good point. Thank you. For my FX book, does the data start to record as soon as it connects to your account? And there's a way I have full history of account and FX book. Okay, so watch carefully. For any of the FX bookers that have a question about this, I'll switch over. So this will start to pull all the data in, yes, over the whole history when it's been trading. But you do want to make sure that if you're inside the VPS on your MT4 platform, as you should see here on the screen, I'm showing our main 3-ring live account that I'm trading here. You want to go into down at the bottom in the account history tab, click on it, right click, select all history, make sure all history is being pulled in from the brokerage and your FX broker. Once that happens, on the next update with MyFX, it should pull all that data in. Now, if any of our other experts want to chime in here, or there's something in addition to that I forgot to mention, feel free to post the question. Good questions, by the way, guys. Is there any way I can do a deep dive into the strategy that Alexander is running? Yeah, you can call the developers if you want, Rick. They're not going to tell you because they haven't told us either. As changing the range interact with high volatility settings. All right, so let's go back to the settings here. So the question was, how does changing the range interact with high volatility settings? So here is the range. See the range between levels? That's what you're asking about, Anonymous. The larger the range, the less trades it's going to take. It's that simple. Knew I have the default settings, but I want to personalize and customize the settings according to my preferences. How can I start? All right. I get this question a lot. So here's what I say. 1, ask yourself this question first. Can I afford to lose capital? 2, how long have I run a demo account? Okay. If you're telling me 2 or 3 weeks, I'm going to tell you run longer. If you're getting impatient, don't. Run the demo longer. You can even play around with the settings. The beauty of demo is for you to understand how it operates, right? It's for you to understand how to change the settings go, for you to play around with the settings. You can get crazy with anything in this top 6 area, right? Even a little higher. You can even start off with just a fixed weekly goal, right? Just double click in here, you can choose a fixed weekly goal. Then obviously this line below it becomes operable, right? Right now in trailing equity, the fixed weekly goal is an inoperable field. It does nothing right now because the trailing equity and the 4 successive lines underneath it are what's important, okay? Anything has to do with trail, right? You can play around with range multiplier and position size. But just understand you want to go through where the high volatility settings are in terms of us flipping these, which essentially gives you almost the same profit with a lot less risk. It's the reason we did it. I probably wouldn't mess around with any of this stop loss pips, right? And once you get into some of this real hardcore stuff, starting to change stop losses, which you may want to do if you are trading a more volatile pair. Okay, GBP NZD is an example. That is Jesse's baby. I would use his channel to go through that. Remember, you can access all these channels, guys. Just go to the back office, click on the dashboard. On the right-hand side, there's 3 products. Select the one you're trading. Scroll all the way down. Join all of our trade checking channels. You raise a lower range between levels. You're welcome to play around with that. There are different traders that are experts that I consult with on this software because let's face it, guys, I've only been in this game for 3 or 4 months. I'm no near the expert of some of the guys, especially our beta test groups and some of our R&D guys that have been playing around with this stuff for over a year. These work, okay? So unless you are Joe expert and you've got massive data like some of our team members do, I honestly, if you're new, I would not be tinkering around with a lot of this stuff. You can certainly set these at trailing equity starts higher, right? In your trail equity buy, remember the 2% is just an example default setting. You can put it higher, lower, right? When 2% is what's attained in terms of the account's performance each week, it turns this on, it becomes active, it starts hunting through and protecting the account. Account falls back 1%, you're out. Okay, you could turn that off. Go fix weekly goal. You could play with the lot size, which is something you probably want to do if you're trading bigger accounts, right? Just understand the lot sizes, all posted in the back office. Lot size is 0.01 per 3K of live money for ultra conservative settings. Why? And with all of the settings that you see here on our big account, we can withstand a 1,000 pip move in all 3 pairs with those settings. Basically, massive volatility. It's not going to blow the account out. I increased lot size by 0.01 per 3K for conservative. If you want to go aggressive, it would be 0.01 per 1K, which right now, unless you're an expert, I would not recommend. When is a good time to add a 3rd pair, and which pair would you be recommending? I currently have. So you have the main one, Euro US dollar. You have the US dollar JPY. Just understand if you add that 3rd pair, which would be an account, in my opinion, it would be over 3 or 4K. It seems like that number keeps going up every week with me, huh? Right? Just because the Euro JPY, which is something you may want to consider adding, has a little more volatility associated with it. In some cases, twice. So I always like these questions, guys. This is a good one. And no offense, Anonymous, but how can one make 5% on a $5,000 account in a week? Well, the answer to that is you have to have more aggressive settings that you see here. So if you're willing to change those aggressive settings from the conservative that you see and sort of shoot for the moon a little more, I like to say, you also have a bigger chance to lose 5% too. So the question is, what are you willing to tolerate as far as volatility in an account? So maybe give some thought to that. I also say if you had an account 10 times larger than your current account, so if your current account 3, just pretend if you had a $30,000 account, what would you be happy with in terms of performance on the account a week, right? Would you be happy with $300? Would you be happy with $3,000, which is essentially 10% a week, right, on a $30,000 account? Most people would be, happy maybe somewhere in between those numbers. So if you're happy with that kind of percentage on a $30,000 account, why wouldn't you be happy with it on a smaller account? So I'll challenge you to think about that. All right, what settings should I put on to make 5%? Didn't you just ask that question? Is it possible to have all trades auto-execute instead of having to manually approve them? Rick, talk to your upline. I don't know. My previous question recommended. All right, cool. Yes, you're welcome. Thank you. Yeah, appreciate that. Thank you for the nice comments as well. All right. What else do I want to address? Let's jump over to. Actually, bear with me 1 second here. Okay, here is the. So here is our beta of the 3K. These are the pairs that the account are running. This account essentially is a 0.01 per 3K beta daily on 3 pairs, but we're running extra pairs. Okay. And this account has really begun to, it really came and beefed itself up, and then we turned it off. But we're going to probably try and restart that. The other one I wanted to show is the high volatility settings account. So this essentially is the live account, but this is the MyFX book on it. You can see that we started this account, and we're in about $516 a draw, or $101 in drawdown right now. So this account's actually done pretty well, and this is just goes to show you, if you don't get in and tinker with stuff and you just sort of let it play out, right? You can turn the account into something. I mean, so essentially, here's 10% in a month. 3 pairs, conservative settings. Let's take a look at the summary on the pairs. Yeah, so you can see that USD JPY hasn't done all that great, but it's funny. Look, as I joked with some of our directors a couple weeks back, I'm like, watch, I'll pull Euro JPY out of the 3 ring, which I never did, and the thing will come back and kill it. Look at that. It's put up most of its profit. Now, granted, this has more volatility, this pair to it. Volatility's been a little lower, but historically speaking, and this one's just been a complete wackadoo related to anything that has to do with Brexit. Okay. So just keep that in mind if you're trading this ring. But the important thing is that, we haven't shot for the moon. We've been real conservative in this account. We haven't gone in and really changed anything. I just let it play out, right? And the accounts, it's in drawdown right now. But I mean, it's still pulled off and it's climbing itself back out. So we're really not as concerned with the account right now. And just look at the win rates on this thing here. I mean, the key thing to me is, I want to be somewhere in the 60s with these win rates. The win rate on the shorts on this thing has been really good. I mean, short amount of data, right? 1 month, right? So I guess you can't really be taking a victory lap on this yet. But I think I wanted this to play out for probably the whole summer. I don't know that we're going to change anything in this account the entire summer, so that we can come back and really be able to show people, hey, look, here's a live account. We're not tinkering around with it. We're not out shooting for the moon. We're not, we're basically pretty darn conservative. There are people that trade this type of settings on a 1-minute chart, because remember, this is traded on a daily, which means it takes less trades. And the ones that are trading on a 1-minute chart, they've done well, but the account's taken just a lot more trades. So maybe at some point, once we get through our huge data dive that we're doing right now with a lot of the different groups that I'm privy to from a beta standpoint, I'd like to see if we can maybe recommend something in addition to some of our new software coming out that we could trade on a smaller time frame. So stay tuned for that. All right, let me just check the. Rick, if you want, you can connect your LCM FX account with my FX book. I would recommend it. All right, so Mariana, I don't really get into individual currency discussions because I try to keep this stuff real high level. You know, if you genuinely have an interest in something, just Google it. So if you're wondering why the JPY is so weak, or if the chart related to it, I mean, I don't know if you're asking me if it's a USD JPY or if it's just in general. The JPY, just looking at it from the standpoint of how rotten the Japanese central bank system runs, and what their mandate is as a central bank, is one of the big reasons that the country just hasn't done well. And their currencies have typically been very poor in comparison to global currencies. So that is maybe not the large macro answer that you wanted, but you can go to like a Forex factory and look at the charts. You can see why it's been moving around, but I'll challenge you to do your own technical analysis on that. All right, guys, 50 minutes after the hour, and I need to exit. Time for some client meetings. So today is the 7th of July. I am Steve Vettel. I want to tell everybody thank you for joining. Please spread the word. I still don't think we have enough participation on these calls as we should. So, I mean, I would love to see, in a perfect world, you know, a 40 or 50% of subscribers on live calls. That way they can ask questions, you know, but talk to your team, you know, if they want. You can go and see the review on this. If you guys have any questions that I did not answer, you can always email them to me. Let me just show you that screen here before we switch over to that. That is my email right there, svettel@auvoriaprime.com. If you do send me an email, it has to be attached to a MyFX book, or I'm not going to answer the email. It also has to be, you have to explain in detail what you're asking for. Don't just throw 6 words at me like some of my buddies do in a text and wonder why they never hear back from me, right? So put a full thought into the email, and also make sure you have a screenshot of your settings. And, you know, always happy to answer emails related to that. So I'm out. Guys, have a great week. I will see you Saturday morning. If anybody has any ideas, and this same goes out to all of our directors, any ideas on you know, things you want me to talk about inside the call, maybe outside of my normal discussion, you know, drop me a line. Let me know what's going on. Otherwise, everybody had a great week. Stay safe. And don't listen to the crazy news media.